Hello everyone, this is Trader Jay here, bringing you part two on the tutorial of how to utilize the NinjaTrader Strategy Builder. Now, in part one, we used the Strategy Builder to build a quick trading strategy around the MACD crossover. So today we're going to utilize the Strategy Analyzer. We'll load that strategy that we created and show how to back test that strategy over a period of time against whatever trading mechanism that we want. In this case, we're going to use the ES for testing purposes. So let's just get into it. So here we are, we have NinjaTrader loaded and we have our control panel up. So what we're going to do to bring up the strategy analyzer is we'll go to new and down here, strategy analyzer. So we'll click here and we should get the strategy analyzer loaded up. So there we go. This is the strategy analyzer. And so here we have our display, and this will give us all the information that we're looking for. Over here on the right under settings, this is where we're actually going to load our strategy. So the very first thing we're going to look at is the backtest type. And in this case, we have it set at backtest. We have optimization, which we'll go over a little bit later. Walk forward optimization, we're not going to get into any of these three. We're going to focus on backtest and optimization. If you have interested in seeing the walk forward optimization, multi-objective optimization, or AI generate, then let me know and I can put together a video and go through these things. But for today, we're going to go through backtest and optimization. So we'll leave it at backtest. For strategy, what we're going to do is select the strategy that we built. And as you can see, I have a lot of different strategies that I've played with over time. I should probably clean this up. But the one that we built in part one was the Strategy Builder MACD crossover. So we're going to select that. And as you can see, it automatically loaded the parameters that we had set. So if you recall in part one, we created an input called profit, one called stop, and one called contracts. And by default, it loaded those numbers in that we had created. So 8 ticks of profit, 4 ticks for a stop loss, 1 contract. Now, the next thing that we need to select is the instrument that we're going to apply this test against. So we will hit this drop down, and I've already preloaded the ES for July of 2023. You can always go and find, go through here and find whichever instrument that you want to backtest against. But for today, we'll just use the ES. Price is going to be based on the last minute, because I'm trading off of the minute chart, and we're going to do the 1 minute. If we wanted to trade, or if we wanted to backtest off of, say, the 5-minute chart or 15-minute chart, we could do that as well. But for our purposes, we're going to test off of the 1-minute chart. Now, because we're looking at a futures contract, futures have an expiration, basically a start and an expiration. So trying to backtest the ES with a June expiration, you have to remember the previous contract expiration period was the 3rd Friday in March. And again, I'm not going to get into all the specifics of when contracts begin and end, but realistically, we wouldn't be trading the June expiration ES until the March expiration happened, or right around that time. So for the start date, let's just select March 20th. And so if you noticed, March 3rd, 10th, 17th, this is the 3rd Friday of the month. So this is the date that the March contracts expired. And so we're going to select the first day of basically the new contracts. And we'll just go through today. Today is Friday, June 2nd. And so in this month, our June contracts expire. So we're going to look through the entire period, that 3-month period to date of the ES with the June expiration. So for trading hours, if you don't utilize any trading hours, it's going to backtest basically 24/7. Now, unless you plan on trading 24/7 or leaving your strategy open 24 hours a day, it's not pertinent to do this. You want to utilize the trading hours that you plan to actively use this strategy. So for trading hours, you'll see that there's all kinds of predefined hours. Now, in my case, I trade on the West Coast, So the market opens at 6:30 a.m. for me. And if you've listened to any of my previous videos, I tend to stop trading at 11 a.m. I try not to trade past that. So 6:30 a.m. to 11 a.m. Now, I created a custom Monday through Friday trading hours uh, section for trading hours. And that's defined as Monday through Friday from 6:30 a.m. to 11 a.m. Pacific time. You can customize this and put in whatever hours that you want. We can go over how to configure trading hours in another tutorial if you'd like. But for today's purposes, we're just going to do that. And I'm just letting you know that the trading hours are Monday through Friday, 6:30 a.m. to 11 a.m. Now, break at end of day. Again, we've covered this before. Essentially what that means is if I still had a trade open at the end of the day, it would close that position out rather than trying to roll it over into an intraday contract, which has a significantly different margin. So I never hold my trades overnight. So we're going to do break at end of day. Now, one of the things people quite often forget is you really need to include commissions. If you don't, then you're getting your gross profit or loss, not the net. So remember, if you made $100, but you had to pay $50 in commissions, then your gross or your net profit is actually only around $50. No, it's not realistic. I'm just using that as an example. But now imagine you had a loss of $100. But if you didn't include those commissions, your loss might actually be $150. So I always find it very important to include commissions. So we're going to check include commissions, and we're going to leave the maximum bars to look back at 256, bars required to trade 20. We went over this in part 1. Nothing changes there. Fill limit orders on touch, we're going to leave that checked. I want that checked because I want the strategy to attempt to fill that order the second that it touches that tick that I'm looking for. So in this case, I think our profit target is, what did we set it at? 8 ticks. So the second that it hits 8 ticks, I want it to attempt to fill that. I don't want it to wait until 9 ticks to say, okay, now I'll fill it. So we're going to fill the orders on touch. Same goes with the stop loss. We'll leave slippage at 0. We can get into this in just a minute. Entries per direction, let's up that to 2. That allows us to have up to 2 entries if we don't get our initial fill and it fills the conditions again. And then we'll leave everything else the same. Set order quantity per the strategy, time in force, good till close. So at this point, we've loaded the strategy that says anytime the MACD crosses over the average, and I believe our strategy said when the MACD is above 0.25 and it crosses over the average, then we'll enter a long position. We also put in a parameter that said if the MACD is below negative 0.25 and it crosses below the average, then we'll enter a short position. So this is what we're going to be testing. And we're going to test this from the beginning of the June contracts through today. And all we have to do is click run. And you can see how quickly it ran. Now let's take a look at what our output was. In this case, and again, I never said that this was a good strategy. It was just a strategy. You can see right here in the very first row, total net profit. All trades, if I was to just leave this running, was negative $1,937.50. Out of our long trades, we lost $450. And out of our short trades, we lost $1,487.50. So as you can see, this was not a successful strategy over this period of time. Now, it may be successful over a different period of time. We could test that out as well. If you look at the gross profit was $9,362, but the gross loss was $11,300. And you can see that broken down between your long trades and your short trades. For whatever reason, it's not showing me the commissions here. I'm not worried about that right now. The fact that I'm showing a loss is bad enough. Max drawdown. So what this means is at the most, how far down did I ever get? And at the most, it was negative $2,387.50. So on the positive side, I at least came back, what, $400? So not exactly the best ratio that you're looking for. If we scroll down here and we see total number of trades, we can see that there were 320 trades made during that period that met those conditions. 180 of those were long trades and 140 were short trades. Now, percent profitable, Out of all of the trades, only 29.38% were profitable. And you can see out of the long trades, 31.67, out of the short trades, 26.43%. So even with a 2-to-1 profit to loss ratio, or your risk to reward is 1-to-2, when you only have this low percentage of profitable trades, it's going to be very difficult to make this a profitable strategy. So based on this time frame, we can see it's probably not the best strategy to implement, and definitely not implement haphazardly by not even watching what's going on. So we probably wouldn't want to do that. But for simplicity's sake, let's say we only wanted to look at, let's say, so far in June. So let's put the start date at June 1st. So we'll just look at yesterday and today, and let's rerun this and see where we come out. So now you can see, had we run this just today, we had 11 total trades. All of them were long. 4 of them were winners. 7 of them were losing. And we had a profit of $50. And as you can see, my commissions are not being included. And I'm going to have to look into why the strategy builder is not including commissions. It should be, but for whatever reason, it's not. I'll dig into that. At this point, somewhat irrelevant. Just keep in mind, you should always calculate your commissions. So as you can see, if I had run this today, actually, to be honest, I would have about broken even, because I'm not showing the commissions. And at 11 trades and a little over $4 in commissions per trade, it's $2.09 each leg with my commission structure. That's going to basically be a break even. So this was not a very successful day. I really, if I break even, I'm losing money on the day. I've just lost my time. And so you can see we were only 40.83%. So what's the next thing that we could do? Well, we could test this out and say, well, hey, what if we wanted to up this to 12 ticks of profit instead of 4 or instead of 8? But we left our stop loss at 4. Well, let's rerun that and see what happens. If we did that, well, look at that. I still had the same number of total trades, the same percentage of wins, but now I made $250. Hey, that's a win. So as you can see, it's very easy to change your profit target, your stop loss. We could change the number of contracts. What if we were doing 10 contracts? Boy, that's a big loss if you lose on 10 contracts. But there you go. If I was to trade 10 contracts just yesterday and today, that was a $2,500 profit minus commissions. So you can see how easy this is to change and back test. But if we wanted to look at optimizing, so let's change this. Let's go back to the full period. So go back to March 20th begin date, and we'll go through today. Now, instead of backtest type at backtest, let's change this to optimization. So what we're going to do now is we're going to put in a set of parameters that allows it to test over this time period all the different possibilities of profit targets and stop losses. So in this case, you can see profit 8, 8, and 1. What does that mean? Let's set the minimum at 1 tick of profit, right? Let's put the maximum at 20 ticks of profit, and we'll leave the increment at 1. So it's going to test at 1 tick, 2 ticks, 3 ticks, 4 ticks, and so on until it gets up to 20 ticks. So let's close this out. And you can see 1, 20, and 1. Now let's do the same thing with our stop loss. So we're going to go with 1 tick as the minimum stop loss, which, let's be realistic, that is not a good parameter to set, but for testing purposes, let's do that. The chances of you getting stopped out on every single trade are extremely high if you only have 1 tick stop loss. Very rarely do you enter a trade and you don't see the price action fall back just a little bit. The majority of the time you would get stopped out. You have to give yourself a little bit of runway. But for testing purposes, let's put it at 1. And since we're going to a maximum profit of 20, and we want to keep a risk to reward ratio of 1-to-2, let's put the maximum stop loss at 10 ticks. So that's a pretty good place to put it if we want to keep that risk to reward ratio potentially in a very good spot. And again, we'll let this be the increment of 1. So it'll test it at 1 tick, 2 tick, 3 ticks, and so on until we get to 10 ticks for our stop loss. So we can collapse this. We're not going to worry about contracts. Contracts are a little bit irrelevant. It's just a multiplier, really. So if we had $100 of profit with one contract, well, we know that with 2 contracts, it would be 200 and so on and so forth. And your losses would be multiplied the same. So let's do this. So now we've changed it to optimization. We still have our same strategy, but we've altered the step throughs that we want to check for profit, stop loss, and click run. So now it's going to go through, and you see it going through every single bar over those periods of time. And you can see from March 20th through June 2nd, the best possible setup that we had was right here, which is interesting. And that was with, over that period of time, we would have made $2,087.50. And that was based off of, geez, what was this? Parameters. That was 1 tick of profit, 8 tick stop loss. Wow, I would not have expected that. That doesn't make sense to me, but this is what the backtesting showed me. So running 1 tick for profit, 8 ticks for a stop loss with 1 contract, we would have made $2,087.50. And if we scroll down, you'll see why. 320 trades, 94.69% profitable. Now, again, I've said this before, just because you have a very high percentage of profitability when you take into account the number of trades, that doesn't mean that you're going to have a profitable strategy. And in this case, it is profitable. Had 17 losing trades with 1 tick of profit, 8 ticks for stop loss. Now, that is not a very good risk to reward ratio. And as you can see, in this particular case, it worked out over this period of time and these trading hours. It's not a risk to reward ratio I particularly would recommend, but you can see how this would play out. Now, let's try this same strategy, but let's use a different instrument. Let's do the March expiration, right? So March expiration, we're going to go back to, let's see, 1, 2, 3. That actually started December 19th of 2022 and went to March 17th. So let's run that again, but with a different instrument and different time frame. Now, remember, we were at positive $2,000 running it with the June expiration. Now let's see with the March expiration where we come out. And here we go. It's iterating through everything. And there we are. As you can see, now we ended up with $1,550 of profit over that contract expiration period. So a little bit less. And you can see what was most optimal in this way was 1 tick of profit, 10 ticks of stop loss. So very interesting. And you can see how, given a period of time, things change of what that optimal strategy would be. Now, again, not a risk to reward ratio I would recommend. And the other thing to keep in mind, these are all based on perfect execution. And this is based on a computer making these evaluations. So if, let's say, let's look at our chart. These were some trades that I took today. Let's go back here, get some of this junk out of the way. So let's say we were looking at this chart and we wanted to make an entry. Let's see, where'd the MACD crossover? We had a crossover right here, right, where it went below. And so we would have entered a short position here. So in theory, we should have entered at exactly 4247.5. That's what the computer will compute on when you run the strategy analyzer. And it's going to look at exactly the number of ticks for profit. And let's say it was looking for 2 ticks of profit. So it's assuming that if you went short and you got to right here, 42.47 flat, it would fill that order and you would be out. But the reality is we have things called slippage. And as a human being, and as the way that the market works, you're not always going to enter exactly where you want. Your order will not be filled exactly where you want every time. And just because you hit your profit target does not necessarily mean that your order will be filled. You may be trading multiple contracts. None of those contracts may be filled if you hit just your target and it retracts. You may get a partial fill. But the computer is looking at this with specific entries and exits, and it doesn't calculate slippage, it just assumes everything. So what we can do, and you'll see how this drastically changes things. If you recall slippage, we have that set at 0. So let's assume 1 tick of slippage, and let's see what that does to our analysis. So let's run this again. Here we go, almost done. And there we are. Look what happens when you give just 1 tick of slippage. We went from positive $1,500 to negative $4,637. And that's the best possible given this period of time. And that's with an 18 tick profit target, 10 ticks for stop loss. So it's amazing what slippage can do. So this is just a quick tutorial on how to use the strategy analyzer and how to backtest and test for optimization. So I hope you found this useful. We can go into things in more depth if you would like. Leave me a comment if there's something that you would like to see. I'm happy to go over that. I'm happy to go over pretty much anything. So safe trading, my friends. Always use a stop loss. Imagine how bad some of these numbers could be if you didn't. But this is how you can utilize the strategy analyzer to backtest and optimize any strategy that you have put together over any time frame using any instrument. So again, I hope you found this useful. Please remember to use your stop loss, run a positive risk to reward ratio, and keep your money safe. Once you make that money, keeping it is the most important thing. So like and subscribe to my YouTube channel. Hope you found this valuable. Trader J SD, YouTube and Instagram. I'm also a member of From the Bottom Trading Group. You can find them on Instagram and YouTube with a daily Discord, free and open to all members who would like to join. Veteran-owned group, like-minded individuals, all learning to trade across stocks, options, futures, you name it. Great group of people. Hope to see you there. Today is Friday, June 2nd, and I look forward to seeing you hitting the charts on Monday. Safe trading, my friends. Have a great weekend.